Hello everyone. We were discussing the chapter depreciation, reserves and provisions. In the last class we have discussed about one of the method of providing depreciation, that is fixed installment system, or based on depreciation based on the original cost or original cost method of providing depreciation. Now today we are going to discuss another important method of providing depreciation, that is called diminishing balance method of providing depreciation. Diminishing balance method, or it is otherwise called written down value. Written down value. So let us discuss that written down value method. Written down value, what it means. Under this method, how the depreciation will be provided? Depreciation will be provided on the opening balance of asset every year. On the opening balance of asset every year. For example, in a year we have purchased, that means in the beginning of a year, in the beginning of the accounting period, we have purchased an asset for rupees 5 lakh. Asset is purchased for 5 lakh. Then that asset, its depreciation for the first year will be 5 lakh into certain percent. Suppose if it is 10% depreciation, 5 lakh into 10%, that means 50,000 will be written off. Next year beginning, what will be the opening balance? 5 lakh was there, out of that 50,000 is written off. So next year beginning, it will be 4 lakh 50,000. Its opening balance is 4 lakh 50,000. Then what will be the depreciation for that year? It will be 1% of the opening balance of that year. That means 4 lakh 50,000 into 10%. That means 45,000 will be written off that year. Okay. So in that way, we have to prepare the asset account. This method of providing depreciation is called the written down value method or diminishing balance method. Let us discuss this method with the help of an example. Okay. For example, on 1/1/2016, a company purchased a machine of rupees 2 lakh. 2 lakh. And later on 13/6/2018, the company or the asset was sold for rupees 1,55,000. 1,55,000. And purchased then on the same date, purchased another machine at the rate of rupees 1 lakh. Okay, you have to prepare machine account up to 31st December 2019. 31st December 2019. This is the procedure. So you have to prepare the machine account up to 31st December 2019 by providing depreciation at the rate of 10% on written down value method? This is the question. So we have to prepare machinery account or machine account. So let us prepare the account. Machine account, date, particulars, amount, date, particulars, amount. So when it purchased on 1/1/2016, we can write the date 1/1/2016 purchased asset. So we have studied the journal entries regarding purchase of asset, providing depreciation, charging depreciation to P&L account, and sale of asset. All these journal entries we have studied in the previous method. So when you go through that video, you can come to know that what are the journal entries. Just please refer that video also. Okay. To bank. That means the journal entry is asset account debtor to bank. So how much is the value? 2 lakh rupees. We can write that 2 lakh rupees. And depreciation is to be provided at the end of the year. So we will write 31/12/2016 by depreciation. By depreciation, how much? 10% of 2 lakh. That means 2 lakh into 10%. That means 20%. Then let us balance that amount. 2 lakh taken here. 2 lakh balance 1,80,000. Write the entry as balance carry. Next here, that means 1/1/2017. We will write the entry here to balance brought down. How much? 1,80,000. 1,80,000. Then on that year we have to provide the depreciation. It will be on last date of the year. That means 31/12/2017 by depreciation. 10% of 1,80,000. That is what is called the diminishing value method or written down value method. Okay. So here it will be taken 1,80,000 into 10%. That means 18,000. Okay. So 18,000 is provided. Let us close the account here. 1,80,000 can be taken here. 1,80,000. 1,80,000 minus 18,000. So 1,62,000 is the answer. Okay. So we will write by balance capital. Okay. Then next year 1/1/2018 to balance brought down. How much? 1,62,000. Okay. Then what happened on that day? That year on 30th June 2018, the asset was sold. Asset was sold. Then what will be the journal entry? Yes, by bank. You will write 30/6/2018 by BAM. How much? 1,55,000. 1,55,000. Then we sold that machine on 30th June 2018. Then what will be the depreciation up to that day? We have to calculate the depreciation. That means on opening date 1,62,000. Then depreciation should be for half year. So the depreciation we can write here. Depreciation will be calculated on 31st December 2012. We can write the depreciation. Before that, let us find out the profit or loss. Calculation of profit or loss on sale. Calculate the profit or loss on sale. Then book value of assets sold on 30/6/2018. That's what we have to calculate. It's opening balance. Opening balance. How much? 1,62,000. Isn't it? Then depreciation up to the date of sale. That means 1,62,000 into 10% into 6/12. That means from January to 30th June. So it will be how much? 8,100. Isn't it? 8,100. So that 8,100 we have to reduce from that. That is the depreciation. So 8,100 can be deducted. 1,53,900 is the book value. So this is the book value on the date of sale. Then what is the selling price? It has sold for 1,52,000. Then selling price, or we can write sales price. Sale price of the machine is equal to 1,55,000. So the 1,55,000 is the what? Sale price of the machine. So what is the loss? 1,100 is profit or loss. Our book value is 1,53,900 only, but we could sell that for 1,55,000. So sale price is more than the cost price. So it is profit. Okay. So this is profit on sale. Profit on sale 1,100. See where to write the profit on sale. In the last problem, in fixed installment method, there was a loss, so that was shown on the credit side. Why? Because loss should be shown on the debit side of the profit and loss account. Debit side means all the loss and expenses will be shown on the debit side. So in order to show that in the debit side, we have shown loss in the credit side here. Now this is profit. Profit should be shown on the credit side of the profit and loss account. So here we have to write on the debit side. But write 30/6/2018 to profit and loss account. Profit and loss account. How much? 1,000 Okay, 1100 is written. And on the same date, another machine is purchased for rupees 1 lakh. So another machine is purchased. Here is saying here we have written. So on the same date by bank, how much? 1 lakh rupees. Okay. Now we have to provide the depreciation. Depreciation we will provide on 31 December 2018 by depreciation. Depreciation, how much we will give? For the first machine, we have created depreciation 8,100. So that 8,100 plus how much? 10,000. 10,000, how you got? This 10,000 is 1 lakh into 10%. Sorry, here it will be 5% only. 1 lakh into 10% into half year. Isn't it? That means 1 lakh into 10% into 6 by 12. So 5,000. So 13,100 is the total amount of depreciation. Then now let us balance this account. Here 2,63,100. 2,63,100. That will be taken here. 2,63,100. From that we have to deduct this one, so we will get 95,000. Otherwise also it is easy to find out that because first machine is sold and its depreciation is also deducted, so that first machine is completely gone. And second machine, its value is 1 lakh, its depreciation 5,000 is deducted. So what is left? 95,000 is left. So we can write here 31 December 2018 by balance carried down. Okay, then 31 2019 what write to balance brought down. How much? 95,000. Then 31 total 2019 by depreciation. How much? 9,500. 9,500. So this we can cross here. 95,000. 95,000 minus 9,500. 85,500. Isn't it? So 85,500 is the answer. That will be balance carried down. Then that can be brought down here. 85,500. That means 1/1/2020, right? To balance brought down. 85,500. Okay. Now let us see. This is the machine account. Then two more account you can prepare. What it is? Yes, it is depreciation account as well as profit and loss account. So that same way what we have done in the previous case, the same way you can prepare. Okay. Understood? That means in depreciation account, first we will write by asset, that means this 20,000 will be written. Okay, then that will be shown in the debit side. That means in depreciation account we will be writing to machine, and that money will be transferred to profit and loss account. Okay, every year it will be closed like that. Is it clear? Same way what we have done in the previous case. Otherwise, for clarity, I will be writing here once again. Let us see the depreciation account. Here we have a depreciation account and profit and loss account. Profit and loss account, of course, there will not be a debt column. But here we have to write for different years. That's why I have mentioned here separate column, just like the debt column. Okay. But normal case in profit and loss account, debt column will not be there. That you know. So first of all, we have to post this transaction. Here we have written 2016 December 31st by depreciation. So in depreciation account 31 12 2016 debit side to machine. How much? 20,000. Then same date 31 12 2016 we have to transfer that to profit and loss account. Profit and loss account. How much? 20,000. So this is formula. 20,000 is closed. So like that, this is transferred here in the credit side. It is written profit and loss account. So in the year 2016, what we will write? To depreciation. Depreciation. How much? 20,000. That also is closed. Next year like that, 31 12 2017 to machine. How much? Next year 18,000. 18,000 will be written. Same way 31 12 2017 by profit and loss account. How much? 18,000. That also closed. Then here 2018 what we will write? To depreciation. How much? 18,000. This is 2017. 2017 depreciation 18,000. Then that also will be closing. Then again 31 12 2018 by to machine. 2018 depreciation became how much? 13,100. 13,100. So here 31 12 2018 by profit and loss account 13,100. That also can be closed. Here it is for 2018 depreciation 13,100. It is closed. Here also closed. And then 31 12 2019 to machine. How much? Last year depreciation is 9,500. 9,500. And that 9,500 by profit and loss account 9,500. That also closed. So here we will write for 2019 to depreciation 9,500. Okay, so this is the way of preparing depreciation account and depreciation account, asset account and profit and loss account under written down value method or diminishing balance method. Now let us see what are the advantages and disadvantages of diminishing balance method. Okay. What are the advantages of diminishing balance? See, we have discussed the problems and told the concept of diminishing balance method. Now we are going to discuss what are the advantages of written down value method or diminishing balance method. The most important advantage is that it's a realistic method of providing depreciation. Why it is realistic? Because the more amount of depreciation will be written off when the utility of the asset is high, and less amount of depreciation will be written off when the utility of the machine is less. Is it clear? So let us explain that. Before that, let me mention that more. It is a realistic method. Why? Since more amount of depreciation will be written off when the utility of asset is high and less amount of depreciation will be written off when the utility of asset is less. What do you understand from that? When we purchase the asset, it's that the asset will be new and it will have more capacity or utility. So when the utility is more, that means when the asset is able to provide more service, that is its utility, then at that time when the utility is more, we will charge more amount of depreciation. You can see in this question which we have discussed. First year we have written off 20,000 rupees depreciation, and at last we have written off 9,500. Of course, that is for another machine. Otherwise, second year we have written off how much? First year 20,000 is written off. Next year 80,000 is written off, and like that it decreases. And third year will be written off from the opening balance of the third year. That means first when the utility is more, we will write off more amount of depreciation, and when the utility decreases, the value of depreciation will be decreased. So that's why it is a realistic approach or realistic method of providing depreciation. And next we can say that it results equal burden of depreciation and repairs. This point we have explained in the last method, fixed installment method. There we have told that since equal amount of depreciation is writing off, and repairs every year after year, repair charge for the machine may increase. So that will create an unequal amount of depreciation and repair in profit and loss. But here what happens? Every year depreciation decreases, and repair charge, of course, we know that when the utility decreases, repair charge will increase. So here every year depreciation decreases, repair charges increases. So we will get almost equal amount of the combination of depreciation and repair charges charged in profit and loss. Okay, so that's why it gives a realistic result. Is it clear? Then this is the method which is usually accepted by income tax authorities. This method is accepted by income tax authorities. Okay, that means this income tax accept this method of providing depreciation for tax purpose. While calculating the tax purpose, we have to use this type of or this method of providing depreciation. That is the accepted method by the income tax authority. Okay, then another point is that the laws on obsolescence. The loss on obsolescence of machine will be less. That is another important advantage. Why? Obsolescence, you know, what is obsolescence? Obsolescence is the chance of outdated. That means when an asset is outdated or no use for working because of technological changes. Some assets may be outdated. That is called obsolescence. So when an asset becomes obsolete or when an asset becomes obsolete, that value which the asset has is our loss. Okay. So here large portion of cost of the asset will be written off in the initial years. See, in that 2 lakh rupees asset, 20,000 rupees we have written off in the first year. So large amount of depreciation will be written off in the initial years. And in the law, so since we are writing off large amount in the initial years, the written down value of the asset at the time of its end will be less. So in later years, if the asset gets obsolete also, the loss will be there, but that will be a less amount. Why? Because we are writing off depreciation in larger amount in the initial years. Okay. So since a large portion of cost is written off in the earlier years, the loss due to obsolescence get reduced. That will be less. Okay. Then another important point we can mention that it is suitable for those assets which last for long and which require increased return. So we can write like that: suitable for the assets having longer life and more amount of repairs needed. That means this method is suitable for the assets which have longer years. So for such assets we will write off depreciation in larger amount in the initial years itself. So it is suitable for assets which are having long years and it requires considerable amount of repair charges also. Okay. So these are the advantages of diminishing balance method. Now let us discuss disadvantages. Disadvantages of diminishing balance method. We can mention two important limitations. First one is the assets cannot be written off completely. Okay, that is one of the disadvantages. The assets cannot be fully written off. Isn't it? That means in the fixed installment method, every year we will be writing off the fixed amount. So at the end of the life of the asset, the value of asset will be zero or its scrap value. Here, at the end, for example, last year, at the end of the life of the asset, the value of the asset, we are writing off that certain percentage of the opening balance. So at the end, suppose it is showing 1000 rupees. So that year, how much we will write of depreciation? 10% or 20% of that 1000 rupees. If we write off 10% of 1000, remaining 900 will be left. Next year, 10% of 900 only need to be charged. That means asset will no longer be zero, or the value of asset will not be nil. Every time the asset will have certain value. So that is what it is saying, that asset cannot be fully written off. That is one of the limitations. Okay. And another important thing is that it is difficult to ascertain suitable percentage of depreciation. It is difficult to ascertain the suitable percentage of depreciation or suitable rate of depreciation. Instead of percentage, we can find out. We can write rate of depreciation. We have simply here mentioned that 10% depreciation or 20% depreciation, but it requires a lot of factors to be considered for ascertaining a suitable rate of depreciation. Suppose how many years life an asset possesses. So various things we have to consider, and after that only we can find out the rate of depreciation. So here it is very difficult to ascertain the rate of depreciation. So these are the advantages and disadvantages, and we are completing diminishing balance method of providing depreciation. Okay. I hope all of you understood this. You can refer some of the problems from your reference book and practice that. And if there is any doubt, don't hesitate to communicate that me. We will clear that. Okay. Thank you very much.